when you get into economics, there's so many variables. And the truth is, you've got to expect good times and bad times in business. And if you were to buy an auto dealership in wherever you live locally, or McDonald's franchise or anything like that, you wouldn't try and time the purchase. You'd try and make the right purchase at the right price, and you want to be sure you got a good business. But you wouldn't say, I'm going to buy it because growth this year is going to be 3% instead of 2.8% or something of the sort. Well, if you have to closely follow a company, you shouldn't own it. If you buy a farm, do you go up and look every couple of weeks to see how far the corn is up? And you worry too much about whether somebody says this is going to be a year of low prices because exports are being affected or anything like that. You buy a farm and you hold it for, I've got one farm that I bought in the 1980s and my son runs it, but I've been there once. It doesn't grow faster if I go and stare at it. I can't cheer for it, more effort or something like that. And I know there's going to be some years when prices are going to be good and some when the prices aren't going to be good. I know there's years when yields will be better than others. But about the farm, I don't care about economic predictions on it or anything of the sort. I do care that over the years it's well tended to, and in terms of rotating crops, and I hope yields get better, which they generally have. In fact, that farm 100 years ago would have probably produced 30 bushels, maybe 35 bushels of corn per acre. And now in a good year, it'd be 200. I mean, we really made progress in this country. That's one reason commodity prices, if you go back a couple hundred years, they've moved so little, is because we've just gotten better and better at whether it's cotton or whether it's corn or soybeans or all kinds of things. And you and I have benefited from that. If you own the best auto dealership in town, the best brand, and you had somebody good running it, you wouldn't drop by every day and say, how many people have come in today, or I think interest rates are going up a little, maybe it'll slow down our sales or anything. No, you buy it knowing there's 365 days a year and you're going to own it for 20 years, so that's 7,300 days, and things are going to be different from day to day and year to year. You shouldn't buy it if the day-to-day stuff is important. We will buy Berkshire when we have lots of excess cash. All the needs of the business are taken care of. We spent $14 billion on property, plant, and equipment last year, way more than depreciation. So we take care of the needs of the business. Then we have excess cash, and what we'd love to do is find other businesses to buy. But if I think the stock, and my partner Charlie Munger think the stock is selling below intrinsic business value, we will buy in stock. When you're buying dollar bills for 60 or 70 cents, which periodically you get a chance to do in stocks, then assuming you've got the cash, whenever some surprise could really take you out in some way. But if we've got excess cash, we'll buy it as fast as we can. I don't worry about the things that I miss that are outside my circle of competence of evaluating. I have missed things that were within my circle, and that's a terrible mistake. Those are my biggest mistakes. You haven't seen them. But it's not a mistake because I miss Netscape or something like that at all. I would say that maybe 5% of the companies or 10% of the companies at most are within an area of my circle of competence. There's something I should be able to understand. If you're running a deficit getting close to 5% when things are really good, that's a new world. Neither the Republicans or Democrats are particularly concerned about it, and we're not having a lot of inflation. That wasn't supposed to happen, but it's happening. And that's why I say you don't want to get hung up on trying to make economic analysis, because nobody's any good at it. You don't get rich doing that. I think the earned income tax credit is the best way to put money in the pockets of people that don't fit well into the market system, but that are perfectly decent citizens and that have made a good bit of the success somebody like I've had with Berkshire or something possible. It wouldn't have happened without the America we have. And if you go back 200 years and we're all working on, 80% of us are working on farms, the person that's the best at that, working on that farm, whatever it may be, is worth maybe twice the one that's the worst. That's the difference between super talent and no talent in the farm economy, picking cotton or whatever it may be. Now, if you're the best middleweight fighter in the world, you may get $20 or $30 million. And if you are just a good citizen, raise nice kids, help in the neighborhood and everything else, but you don't have market-related skills, you'd be good on that farm still. And you would be earning something comparable to most of the people around you. But You don't have something now that, as it gets more and more specialized, and it's going to continue to get more specialized, you want two things for that person. You want them to have a decent life. I mean, they live in a country with 60,000 of GDP per person. You want them to have a decent life, and they can. I also think you want them to have a feeling of accomplishment. So you want them to have a job, assuming that they're not handicapped in some way. You want them to have a job, but the minimum wage would be one way to say, well, we'll make sure that they have enough money in their pocket. But that's got a lot of effects in disturbing the market system. They just need more cash. They don't need a higher wage, they need more cash in their pocket. And the government, at a relatively low cost, can provide a decent living for anybody that's working 40 hours a week and has a couple of children. And we've gone in that direction, and it's sort of bipartisan. I mean, I find both Republicans and Democrats for it. I think it would be better not to have one annual payment, that they get it monthly. And I think there's various things you could do, but you want them to feel part of the system, and you want to have them get, as more and more of these golden eggs are laid, you want them to get a little more of their share. Take a business like See's Candy, which we bought 40 odd years ago. It's a wonderful little business. It throws off capital. We've tried 50 different ways to expand geographically, do all kinds of things. It doesn't work. And we'll try it again and it won't work. But we can move that capital to help buy the NSF Railroad or do all kinds of other things. So we've got a seamless and tax efficient way of moving capital where it's needed. And we've got some companies that really chew up capital, and we got others that kick it off, and we can move it from one pot. If you try to do that with your investments, you incur some taxes as you go along doing it. It's less efficient than what we've got. Basically, let's just say we had one class of stock, we got two, but stock, you and I own a business together, and we think we own all the stock, but the truth is, before the tax cut, the government had a 35% share of the stock on income. Now, it didn't have a share of the assets, but it had a share of the income. And if it wanted to change it to 40, it could have changed it, but fortunately it changed it to 21. And if we had a private business, if we had a McDonald's franchise together, or an auto dealership together, the third shareholder, that invisible shareholder, the government, handed us back a bunch of the shares of stock, and our shareholders benefited, and a lot of other shareholders benefited. I don't know what we're going to earn. As I put in the annual report, and I really think this is unique, I mean, we do not prepare financial statements monthly for Berkshire. There's just no other company would do it, but there's no sense doing it. I know where the money is, and I know how the companies are doing generally, but what difference does it make? Because I'm not going to try and hit any number for the quarter by having a sale on insurance or doing something even worse. And Charlie, I mean, he knows where we stand, and we know what businesses are doing well, which aren't, and we certainly know where the money is. I want to attract the people from the public market that I want, and I want to keep the others away. Costco was built. Saul Price, who started the Price Club, that thing, he sat down and figured out the customer he didn't want. And he set up a system that would keep away the customer he didn't want. Who did he not want? He didn't want somebody buying a quart of milk with somebody behind him with a basket of $200 worth of goods waiting for that. So we put in a membership fee, and by putting in a membership fee, he killed all the drop-in business, the business that belonged to the 7-Eleven. We want Berkshire to keep out people who have expectations about us that are different than ours. I mean, good for them, and I hope they find somebody they fit. But if you're going to run a church, you want your seats to be filled by people that are generally want to listen to your form of religion. And you don't want it to change every week and say, gee, I need a new group, and I'll go out and talk to a bunch of investors and get them to come to my church this Sunday. Because there's only so many seats in the church. There's 1,645,000 or so A-equivalent shares, and those are the seats. And I want them occupied by people that are on the same page I am. China and the United States absolutely are destined to be the superpowers beyond my great-grandchildren's lives, and will always be competitors, and we'll be competitors in business, we'll be competitors in ideas, all kinds of ways. There's no other way it would be. And we just have to make sure that competition doesn't get us to a point where we don't realize that the best world is one in which both the United States and China prosper.